Picture this, a small business owner in a village, a single mom in the city, or a young entrepreneur with big dreams. Without access to basic financial tools like savings accounts, loans, or insurance, their potential remains untapped.
Typically, you have this stereotype, a customer having to go to a bank, getting his documents in place to go and actually interact with the bank. Conceptually, embedded banking is about the bank coming to the customer or the financial service provider coming to the customer.
How does digital banking open doors and increase financial accessibility for these individuals? Stay tuned on Decimal Point. Today, we're diving into a critical focus which is under the 12 Malaysia Plan or RMK12, which aims to build a society that is prosperous, inclusive and sustainable by the year 2025. Doesn't this mean that every Malaysian, no matter where they are, should have fair access to affordable, high-quality financial services? Check out the boost in digital and embedded banking and why it's gaining momentum. Now, embedded banking, this is a relatively new idea to Malaysians. Could you tell us more about what embedded banking is and how does that reduce the barriers of traditional banking?
Embedded banking, you're right, is a new concept. Not very new if you think about it from a banker's perspective, or not very new if you think about even a Malaysian context. There have been some examples of embedded banking. At Boost, we have decided to, double down and make embedded banking one of the key facets of our go-to-market and our product suite. So embedded banking, in very simple terms, means taking financial products and embedding them in non-financial ecosystems. So what does that mean, right? That could be very simply, just to bring it to life, it could be, let's say, take a non-financial ecosystem. It could be an e-commerce platform like a Lazada, or it could be something like Shopee, etc. That could be a digital ecosystem that doesn't typically do financial products, or a Foodpanda example. A financial service provider would essentially embed, let's say, a deposit product, or it could be a wallet, or it could be a simple loan product into that ecosystem. So let's say if I'm ordering food, taking simplest example is actually the pay later model, which is quite popular now even here in Malaysia, where it's essentially you're buying something. You could be buying ideally not a food product, but you could be buying maybe, let's say, an electronic appliance, and you do that at the point of sale. You could do it online, but when you check out, you actually pay in installments.
Yeah.
So that's an example of embedded finance, where you are essentially taking a loan product and embedding it into a purchase. But from a customer's perspective, they're not doing anything different. They're not going to a bank and applying for a loan. They are essentially buying a product, and that's the trigger. They're going to an e-commerce site, or they're going to a physical store buying a product, and as part of that process, they are getting a financial product embedded into their experience. So that's the concept of embedded finance, and that's the simplest example. Of course, it can go all the way into having, let's say, buying something on a food platform, and let's say I want a refund. The refund could go into a special purpose account, which is again, it could be basically, it's a refund account to me, but basically it could be a deposit being provided by some bank in the background. Typically you have this stereotype of a customer having to go to a bank, right? So customer having to go to a bank, and the customer having to do a lot of stuff, getting his documents in place, etc., to go and actually interact with the bank. Conceptually, embedded banking is about the bank coming to the customer, or the financial service provider coming to the customer, basically providing their services in an environment the customer is familiar with. So I think that's the big paradigm shift in terms of how embedded banking really bridges financial products with the experience that a customer is looking for.
So that's embedded banking. How does technology, for example, fintech, help Malaysians have access to basic financial services? And what kind of financial services are we talking about here?
Okay, a great question. I think if you take fintech as an industry, it's probably 8, 9, 10 years old in Malaysia. And I think fintech players have done a lot to complement the traditional FIs in bringing financial services to Malaysians at large. If you take the simplest example, I mean, 8, 9 years ago, I think we were on the same journey when the wallets started proliferating. At that time, what you see today as mainstream, scan and pay, small merchants actually accepting digital payments, a lot of people actually pulling out either a wallet or a bank app and scanning. That's one example of something actually the fintech industry drove, particularly the e-wallets, and that helped also Malaysia become a cashless society, where you had a lot of small merchants, small businesses, food stalls, even non-permanent establishments, pasam alams, etc., get onto cashless payments. So that's an innovation that came through fintech. Similarly, you've had a lot of fintech lenders coming into the space. So a lot of small businesses have been able to get loans from fintech players in Malaysia, where they have basically used alternative data, not just your traditional financial statements, but other data points to give them loans. And these are typically small businesses that couldn't go to large financial institutions because they didn't have the financial track record, they didn't have a collateral, and they just didn't meet some of the credit parameters that a large financial institution would want. So that's another kind of an area where fintech has added a lot. And I think Malaysia was fortunate to obviously have a fairly, even going back 8, 9 years, to have a fairly high penetration in digitization in general. So what I mean by that, the basic infrastructure was there. So high smartphone penetration, fairly good adoption of infrastructure in terms of mobile broadband, high-speed broadband, etc. Even today, the 5G proliferation is quite decent compared to regional peers. So the basic infrastructure was there in Malaysia, and that obviously helped technology as a platform be the primary delivery mechanism for a lot of fintechs to reach customers. So that has happened, and I think a lot of fintechs have now evolved in their own journey. So some of them, like us, we started off as a wallet, got into lending, now we've gone into banking. So fintechs themselves have evolved their model along with kind of the success they've had in servicing customers. The household debt to GDP was quite high. Well, we would help the national agenda as a Malaysian-owned company if we focus on the micro SME as opposed to the consumer first.
So how do we achieve financial inclusivity? A key focus lies in technology-driven solutions. Think digital platforms, fintech, to bridge gaps and empower communities. You mentioned also about Boost, the journey from 2017 started off as an e-wallet. Now in 2024, or just last year, it became a digital bank, right? So this is also known to be a primarily Malaysia-owned digital bank. Could you go through us, or could you explain to us the journey from becoming an e-wallet all the way to becoming a digital bank?
Sure. So I think the first thing important, why did we get into this space, right? We got into this space because we felt that there was a market gap. So we felt fundamentally, going to the point we spoke earlier, that technology had a role to play in taking financial products to underserved segments in the market, whether that's a small business or whether that's a consumer that doesn't quite have the services that perhaps somebody like me has from a bank, right? So I think that was the premise. So we had this ambition at that time, not just to do one fintech service. We had the ambition to do a whole host of fintech services to this segment. So the whole idea is, can we help them save better? Can we help them transact better? Can we help them invest better? Can we help them actually get financing when they need? So it was that ambition to provide all services to this underserved segment. But obviously there was a starting point. You had to start off somewhere and end up somewhere, right? So I think the first point that I'd like to emphasize is that ambition was there, even though we started off perhaps in one vertical. The ambition was there always to provide the full suite of services. services. So the easiest point of entry at that time was actually to start as a payment service provider, a wallet. So we started off in the wallet space, and the wallet space, there were a lot of learnings for us in terms of actually how do you amass customers, how do you onboard customers digitally, how do you do things like eKYC. We evolved with the regulatory guidelines at the time. And I think the wallet space gave us a very good entry point into actually onboarding both small businesses and consumers onto a digital platform. And fortunately, wallet-related services like Scan and Pay started proliferating and started getting mass adoption, which helped the journey. So I think that first part of the journey was really entry point. How do we get into this space? We realized very quickly that a wallet as a standalone is probably not the ideal business model, because it's very difficult to make money. At the end of the day, we all are in business and we all need to deliver returns to shareholders, etc. So we realized probably in year 2 that we needed to expand our services and think about how do we build adjacencies. So that's when we decided to get into lending, right? And we started from quite a different point. So we decided not to do consumer lending. So most people would think, hey, you've amassed whatever X million customers, why don't you now lend to those customers? We decided actually on the other side of the platform there were a lot of merchants. Yeah. Let's start lending to these merchants and then we can go into the consumer segment. And we did that deliberately for a number of reasons. And looking back, that held us in good stead because we did that because we believed that the productive use of money was better than consumptive use of money. So generally when you give it to a business, it's for productive usage. For an individual, more often than not consumptive usage. That's one. The second thing, I think from an overall national agenda perspective, the problem was really on the small business side. Micro SMEs couldn't get financing. There was actually from a national perspective, there was a worry in Malaysia that we are too over leveraged when it comes to the consumer, and that the household debt to GDP was quite high. So actually from a national agenda perspective, we felt we would help the national agenda as a Malaysian-owned company if we focus on the micro SME as opposed to the consumer first. So we built a lot of, I think, again, a lot of learnings over the years on micro SME lending. Today, I think we are the largest in Malaysia by some distance in terms of how we lend digitally end-to-end as a non-bank micro SME. Of course, now we've evolved into banking. And more than anything, I think what we've amassed over the last 5-6 years in lending is the learnings of what to do, what not to do. So we've done over 5 billion ringgit worth of loans, which is quite a lot, dispersed to small businesses. Average ticket size of those loans must have been under 50,000 ringgit on average over that period of time. So that's a lot of loans, and that's a lot of learning. And I think that data is something that holds us in good stead. And we decided, okay, we've got underpinnings of a good business here. How can we stretch it further? So there were 2 avenues to stretch it further. One is go further in the model and maybe add more services, so maybe look for a banking license. The second aspect was obviously to take the story outside Malaysia as well. So as a Malaysia, as a story that had its seed foundation in Malaysia, the problem that we were solving here was also a problem that exists in many markets. So the whole thesis was, okay, we can be a Malaysian company that can actually take our story and take our solution and take our way of solving these problems regionally. And I think very early on we entered Indonesia, micro SME lending, and we've done quite well in that market, providing the same sorts of services, right? And then finally getting into banking, I mean, what we realized in Malaysia was, I mean, one is obviously a banking license in a way was sort of a validation of everything we've done. We came as a company that actually had no experience in this space in 2017. We were a trailblazer in a couple of things we did, like promoting Scan and Pay and also micro SME lending, entirely digital end-to-end. And then kind of it was a validation from even the regulators to be able to be qualified to be given a digital bank license. And I think you're right, we are the only kind of, if you take the 3 conventional licenses, we are there were 3 conventional and 2 Islamic licenses given. I think if you take the 3 conventional licenses given, we are kind of the only Malaysian-based company who was given a conventional license, which I think we took a lot of pride in. I mean, from a business model perspective, the reason we got in was quite simple. We realized while it sounds nice to own a bank and all that, I mean, there's the halo effect. That was not really, to be honest, the real logical thesis. The logical thesis was that, we felt we needed to to grow a lending book. We felt that we had payments and lending in particular was solving problems.
Yep.
But if we were to grow a very large book, 10 billion ringgit, 20 billion ringgit, for example, we would have a challenge getting funding for that loan book. So the only way to solve that in the long term was to get access to a deposit license.
Yep.
At a certain point in time, it dawned on us that it was imperative that we go down a path of getting a deposit license, and that's really why we ended up getting a digital bank license as well. It worked out well so far. I think we disclosed publicly at our peak we had over 700 million in deposits, and we've exceeded our customer account number also by a significant margin. So I think been a great journey for us. Been basically started from zero and went all the way to launch a bank and take the Boost story. Now another focus for us is taking the Boost story to other markets in the region, and it's been an exciting time. And we went from one step to the other step once we realized that what we had done was validated by our customers. So the moment our customers validated and we felt, hey, there was adoption for our products, this was something that was working, that gave us the confidence to take the next step.
That's true.
And that's really what happened.
And I like what you said about serving the underserved, right? And I think this is more towards the micro lending that you mentioned. Yeah. So are there some particular cases, for example, if let's say that it's a auntie or a makcik selling nasi lemak, or it could be a very small business, right? So how are they able to get this micro lending or this micro loan from being part or having access to a platform like Boost?
What would happen is typically we would have online website where you can apply for a loan, and you could get a very small, let's say, small quick loan very fast, and we would typically do that by scoring you with whatever data that we have, and I mean that in itself is quite an extensive exercise. And then of course if you want a larger loan, that happens two ways. One is you may have to submit additional data or documents, most often bank statement, which again we do it very quickly. We do have an OCR technology where we just capture and score you very quickly, and we could give you a higher limit on your loan. Or as you develop experience with us and you have a repayment track record, that also lends to actually getting a large loan facility from us. So the whole idea is we grow along with the customer. Even when we go back to 2017-18, I feel that the adoption of things like QR Pay in East Malaysia exceeded what we saw in Peninsular Malaysia.
What is financial inclusion? Firstly, it is a powerful tool in the fight against poverty. It is when people can save securely, borrow affordably, and access insurance. Secondly, it's an economic booster. Imagine millions of micro-entrepreneurs, farmers, and small businesses having access to capital. That means jobs created, innovation sparked, and GDP soaring. Now, it's fairly easy for me to set up a bank account with a digital bank. But in terms of security, is a digital bank safer than conventional banks?
Okay, so I think there's both a perceptual problem there as well as probably some facts that probably need to be cleared. So I think a digital bank is very much the same as a traditional bank. The only difference is that you can't open branches, physical branches, right? So if you think about your money sitting in a traditional bank, it lies typically not in a bank vault in cash. It lies in virtually in infrastructure, right? The same thing with the digital bank. I guess the only major difference is most traditional banks have their infrastructure on premise, that is locally here in Malaysia, whereas a lot of the digital banks are on the cloud.
Yeah.
Right? So I think from a security standpoint, it's basically the same standards of security. So if you take the Malaysian context, the regulator here, Bank Negara, has a very extensive framework on security called Risk Management in IT, RMIT framework, which was in fact, they are coming up with a new exposure draft. They've just come up with a new exposure draft to update that policy document. And all banks in Malaysia, including digital banks, have to benchmark their security standards in line with that standard. So from the real security aspect of digital banks, it's basically the same in terms of how they are regulated, in terms of the security of the infrastructure as a traditional bank. Also, I mean, there are things like your deposits, for example, are also insured by PIDM, which is exactly the same as the traditional bank.
Because I think people might have a fear, or I might feel like, okay, because it's our money is basically in a cloud. What if someone hacks that cloud or adds an extra zero or at least takes a few zeros off my loan, So in terms of security, people may feel a bit, hey, is this really secure? But as you mentioned, there is a proper framework there to protect our money.
Yeah, and I think the underlying point is it's almost the same as a traditional bank in terms of security, right? It's pretty much the same. I think, so that's more a perception problem, and it's also something that I think digital banks have to spend a lot of time educating customers and the public. If I look though at what I've seen in the last 1 year since the digital banks came online in Malaysia, there has been a lot of money and deposits placed with the digital banks. So the digital banks, and some of them have had brands like Boost that have been out in the market for a while. So digital banks have been able to establish that relationship of trust with the customer, right? I'm not saying that all the work is done. There's probably more work to be done, but I think we are on a good start. I think that's important, and I think whether it's a digital bank or traditional bank, the threat of bad actors in cyber is an ongoing threat, and that is something that not just in financial services, across the whole range of industries, companies are having. We are owned by a telco company. Even in the telco domain, they've had to ratchet up their security standards and security infrastructure, and also their operating procedures to meet this threat. And now with AI, a lot of threat actors are using AI also quite in very ingenious ways to actually hack various companies. So I think cybersecurity is an evolving. So your resilience and your guardrails that you have against bad actors in cybersecurity is something that will evolve, not just for banks but for all players. And that's why you have even Bank Negara continuously updating its standards.
So now let's put our focus towards the East Malaysia, where it's one of the fastest growing or rapidly growing economy in Malaysia, and also because of this rapid growth in terms of micro SMEs and entrepreneurs, especially in the underdeveloped or rural areas. How is Boost contributing towards this rapid growth?
So I'm glad you asked about East Malaysia. East Malaysia is is a part of Malaysia where Boost has been very strong from day one. For example, even if you take our wallet, and we haven't been focused a lot in terms of growing our wallet market share of late. We've been focused on other areas of the business. But even our wallet, if you go to East Malaysia, if you go to Sabah, we are by far the largest wallet there still. So our brand penetration in East Malaysia, both in Sabah and Sarawak, is quite strong. So when we launched our bank, we had obviously a big launch here in KL with the Prime Minister attending as the chief guest. But we also did a separate launch in East Malaysia, where we had a lot of partners in East Malaysia, a lot of retailers, for example, and a lot of partners who've been with us as part of that launch. And we wanted to do that specifically because we felt that both Sabah and Sarawak had been two very important markets for Boost. So in Sabah and Sarawak, I think something that we're very proud of is the fact that we have a fairly strongly entrenched position. And even when we go back to 2017-18, I feel that the adoption of things like QR Pay in East Malaysia even exceeded what we saw in Peninsular Malaysia. That's anecdotally my view, and because of that, I think that part of Malaysia is very, very important to us. So we're doing a lot of things there. So one, like I mentioned, our new bank, we launched it in Sabah Sarawak, and we have partnered. So if you go to our bank app, you would see jars with Sabah and Sarawak retailers there, and we would have a lot more Sabah Sarawak based partners coming on and partnering us on our bank app. If you take our consumer lending product, which is called PayFlex, which is our version of cash loans and buy now pay later, I think about 50% of those customers are from East Malaysia. So we are solving, giving small credit access to customers there. In Sarawak in particular, we are working also with the state government on a couple of initiatives as well to digitize small businesses, to work with the banks there to give out, not just our bank, other banks as well, to give out government funding, dispersed money to small businesses that need it. And we have a lot of merchants there, small businesses, where we are trying to, so right now a lot of them have have a basic QR acceptance relationship with us. We are trying to deepen that relationship. So we are giving them things like, terminal access through sound boxes. We are giving them little tools to help them digitize, like simple statements, e-invoicing facilities. We are giving them obviously our core banking products, a current account, a savings account, a card, and a credit facility. So a lot of the customers over the next 12 months you will see us also working in partnership with the state governments, and also in some cases with organizations like MDEC and even PayNet for that matter, really penetrating our services across East Malaysia. So we have very focused teams. We have teams on the ground in East Malaysia, local teams on the ground. They've been with us from day one, some of these guys, so they know the markets quite well. A lot of the partners we mentioned that I spoke about have been with us for 6-7 years. So every time we come up with a new initiative, they are willing to partner us. So yeah, in a nutshell, very important area for us. It is a high growth area for Malaysia as a whole, especially Sarawak. A lot of state-driven efforts to digitize the state, as well as to lift the flow and get the underserved segments of society up. We will definitely partner in all of that.
The world of banking is undergoing tremendous change, especially with digital banking reaching unbanked populations through mobile. When financial services become more accessible, we are stronger and better equipped to handle challenges for the long term. And that's the future of digital banking, and it's happening now on Decimal Point.